Good morning, ladies and gentlemen. How is everybody doing today? Hopefully, everybody's doing well. Thank you guys again for joining into the stream. Hopefully, today I can provide you guys with some good, valuable information for your trading. Can I look at Goose? I can look at Goose. I can do that. I will do that real fast because you're the first to ask. Alrighty, Goose, the old Goose here. 54.50, relatively good volume. Earnings play cap down. I mean, yeah, it just had its earnings, right? So it kind of had this big shot down. It bounced back up. Yeah, I mean, really, you should probably, I want to say I'd want to watch it short bias, just because that appears to be the way that it's trending. So right, you have your drop down, your bounce back up, and then usually you kind of get like a retesting move back down. Now it's also, you can also argue that right now it's in kind of a buyer's area, sort of, because you can see this dip got bought, that dip got bought. I don't really like it where it's at. I'd probably be neutral on it because it's not really at a high and it's not really at a low. So you're not really getting a good deal, and that's the way I see this. Right now, Goose isn't a good deal because you're right in the middle of price action. So, think if, for example, think if this is the baseline, right? This is the mean, right? This is the mean, right? That's the middle. So above, not a good deal. Below, good deal. You're right in the middle. So what this appears to me is kind of you're almost at fair price right now in terms of what it's been doing. So I really just don't see Goose being too much. I'd probably just be neutral on that stock for right now. All right, now we're gonna hop into Netflix. So this is the main one I'm watching here today. Now, I don't know if like today it's going to play out the way I particularly want, but this is kind of the same thing as yesterday. I think we talked about Netflix yesterday, and I went into how it's kind of turning into an ascending wedge pattern, right? And it looks like it's getting weak, right? We've had our push here. This was like on our earnings day, right? And it pulls back, double tops, pulls back, can't break out, pulls back, tries to break out again, can't do it, pulls back, tries to break out again, can't do it, tries to break out again, can't do it. We're gapping down today, and we're actually starting with a rolling over, look, and the range is getting tighter, right? So the range is very tight here, which means if anybody had been, I'm going to use this red dotted line to get this point across, right? So let's say a bunch of people had been dip buying right here, right? You could see on this day, it kind of held. So if you were starting to buy Netflix like here, or here on this day, that means your stop loss is going to be somewhere in this area, which then means if this starts to break down today, anybody who's been getting long, swinging from yesterday, previous day, they all have their stop losses within this area most likely. So if this does start breaking down, we do also have the possibility that we're going to get a little bit of panic selling from maybe some stop losses getting hit or something like that. And that's kind of it, right? It's been staying in this trading range for a long time. So any new shareholder or buyers coming into the stock now have an average price right at about 354. So if this doesn't start breaking higher, anybody with average prices around this 350 to 354, they're going to start getting nervous as soon as it starts to break down a little bit. And if it does start to break down and they get nervous, then they might panic sell out, or we might just start hitting stop losses, and that can help trigger a nice move down. Now, I'm not banking my whole play on the idea that we're just going to get panic selling, but this is starting to kind of like wedge up. It hasn't been able to break up, so I'm short on it right now. I shorted yesterday, just 20 shares, anticipating we might have this kind of choppy back and forth consolidation continue for maybe another couple days. And if it does, then I can, watch it closely, maybe add more in short and, start sizing into a position, anticipating a move lower. So right now, only in 20 shares, I'm up $40, but am following Netflix short today we'll be watching it short tomorrow in the next couple days until it either breaks out or breaks down, okay? So just kind of watching this one. This one isn't necessarily like, oh, I'm going to short it today. I am already short, right? So this might just be where I hold through today's move, but I would keep Netflix on watch for a short trade, guys. All right, and I'm going to finish up on my next one, which is really these are the only two stocks that I'm considering trading so far today. Not considering, but that my eyes are going to be following closely. So this is an earnings play, CAR, gapping up. Pretty good volume on the gap up. Actually, let me change my volume thing here. I don't like the way it's doing this. Okay. So CAR gapping up, earnings. That doesn't do it, 180 day. Okay, earnings. So here we go. Gapped up right into resistance, okay? So CAR earnings gaps up to 32.90, which is right into this high, that 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 high, and this high. So right into big time resistance. That's all resistance right there on CAR. Okay, now does that mean a CAR won't go higher? Not necessarily, but what we do know is there was a lot of price action consolidation around this $34 area. So CAR might push a little bit and then it might see heavy selling pressure. So I'm still watching CAR long bias for right now until it tells me that it's a sell, right? So right now the gap up is in favor of a long and I'm going to play it long until it shows me, otherwise. So a couple levels I would mark off right now is this pre-market level where it's holding support, bounce, 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 holding. So I'd mark that level off. And then I would also probably mark off, that's kind of far down. I'd probably mark off this 31.86 level, which is this pullback consolidation 1, 2, 3. And then maybe even this dip here at 31.53. And you could even go as far as this pullback here at 31.30s. So there's a couple levels here going down that we could find as support. And then there's a lot of levels upwards that we could see as resistance, as you can see. So CAR, I don't know exactly what's going to happen, but I do like the gap. It is one of the better looking gappers this morning for me. So I'm going to follow closely. Okay. Alrighty, now that we cover that, that's basically, those are the two stocks that I'm keeping an eye on this morning, for the most part. I might trade something else. I'll probably end up trading something else if these don't, turn out too well. Good morning, Mr. Cooper. Good morning, George, and everybody else. Well, let me move that over here. BSX. I'm going to do a quick run through on a lot of these things. Let's see. BSX. BSX is into a 52-week high. It's kind of grinding up right now, holding trend. I would probably wait. Actually, it's kind of testing previous highs. BSX isn't bad. That might... It's not a setup that I would take personally. I mean, like if looking at BSX right now, the guy asking about BSX, I wouldn't trade BSX right now. Like me personally, it's not something I would invest in nor buy. Not necessarily not invest in, but in terms of trading, I wouldn't be buying it right now. It's not really a good deal because you're into a 52-week high. So you're at the highest point it's been all year long, which doesn't really make it a good buy. So I probably wouldn't be trading BSX at that level. DWT, so you're going to be looking at inverse oil, right? So this is going to be oil, right? Inverse oil. I personally, I wouldn't, DWT is most likely going down. If you guys had been watching from even like about a couple months back, I was saying you should probably get long on oil. I said be long on oil, and since then it's been going up and up and up, which means DWT is most likely going to continue down, down, down. Again, remember oil went through an extremely bearish correction, like way over corrected, and that was partially due to the fact that we had an abundance of oil supply, which then obviously decreased prices, and then the OPEC had to step in and start, I guess you could say, overseeing and then manipulating the flow and the supply of oil to therefore increase oil prices again, which therefore increased the overall value of a lot of securities and ETFs regarding to oil. So I do think we're going to see DWT continue lower. IMDZ is a buyout. You don't want to trade that. KNDI was a good mover yesterday. You could follow it for continuation today. I'm not a big fan of KNDI. If you look at the yearly chart, I believe it's the yearly chart. If you look at KNDI, you will notice that it's at a pretty good resistance point. So right now, sellers are starting to come into the stock. So there might be some little long play there, but right now it's becoming a seller's level. What did I have for breakfast today? I had a breakfast burrito containing eggs, sausage, green peppers, mushrooms, onions, a cup of coffee, half of a kombucha, and that was it. NBEV, I'm neutral on NBEV. I am nothing on NBEV right now, completely neutral. Thank you, Daniel. Daniel Lee, you're my biggest fan, brother, so thank you for being here. The pattern for CVS played out the way you called it in the live stream yesterday. I don't even know what that was, but it's great to hear. Yeah, see, you know what I'm saying? Just like it just had that really choppy start, and I never traded it, right? CVS was on the watch list, and I said, this might turn into an ugly trading stock in the day, and if it does, I'm not going to mess with it. And sure enough, I didn't trade it once. There was money to be made, but I just didn't like the flow and how fakey it was to start with, so I just left it alone. The stash is going well. Let's see. What do I think about X? I don't know. I haven't seen X in a long time. Last time I traded X, I think it was going to be up in the 40s, I think, the last time I looked at it or traded it. Really, was it? Oh, I don't even, where was I? I don't know. It had to be up here in the 30s, maybe. I think there's room for X to grow in terms of, upwards. And, I don't follow steel very closely, and I know it's very closely tied to the trade talks and trade tariffs and stuff like that. Which we're also supposed to be coming to a conclusion on very soon. So I think X is worth watching and maybe even worth trading. But like if I were going to be an investor or be someone actively trading X or steel, I'd want to be very closely informed on what's going on with the trade talks and the trade war, and definitely do your research on how exactly the trade wars have affected steel companies. I don't know enough about that particular industry to give too much background on it. But I know enough to say if you're going to be trading this, you're going to want to stay informed with the trade talks, trade wars, and see how the trade wars have already negatively affected the steel companies, and then how you can anticipate the rebound for these companies regarding that situation. I use 1-minute charts, 5-minute charts, 10-minute charts, 15-minute charts, 30-minute charts, 4-hour charts, 1-hour charts, 1-year charts, 20-year charts, 3-year charts, every chart. I use them all. All time frames speak to you differently. You have to play around with it. There is no one size fits all. So your job as a trader is to play around with all time frames to see which ones you like the best and which ones are going to work for you. Okay, I wish I could, but I cannot tell you this time frame is better than this one, because it's really not. Because at the end of the day, whether it's a 4-hour chart or a daily chart, there's still 24 hours in a day, and the time is still the same. It's just only how you perceive it or how you view it that makes the difference. I did see Garmin yesterday. Garmin had a pretty good day, yes. CREG, I looked at CREG this morning. I won't trade it. It seems like it's pretty low volume. I did see KNDI pop yesterday. Yes, I did. Oh, yeah, guys, here's a good one. We're going to pause on the trading thing. I did get my pallet of 26 monitors, so we are going to be doing a free giveaway on YouTube. Not necessarily like on YouTube, but for some people on YouTube. So we're going to do a giveaway of a couple monitors. We're going to do a giveaway to our premium members in our private group. And then we're also going to be putting up some monitors for sale at a really inexpensive, that didn't sound right. Then we're also going to have some additional monitors for sale for extremely cheap prices. So that's something, if you don't get the giveaway, that you might still be interested in, but I got a ton of monitors, and the idea was I'm going to give a lot of them away. I'm definitely going to lose money on this whole thing because I'm giving so many away that I'm not really selling many of them. And that's fine. So we're going to do a lot of giveaways, and then we're going to sell a few, and we're probably going to do an extremely discounted rate so that, you guys, if you want a monitor, you can get one really cheap and you don't have to go buy a brand new one, but it's still going to work. So I still have to open up majority of the boxes. We're going to do a video today of unboxing them, plugging them in, see which ones work, which ones don't. And then once we get a walkthrough on how many work, how many are really good, then we're going to post them and do our giveaways and things like that. Daniel Lee. Yeah, Daniel, you should. All right, you should. What you should do is you just buy a few shares of a company. I tell this to everyone starting trading or starting investing. It's not about making a killing. You're not going to make a lot of money. It's just not going to happen. So the best thing you can do is protect your capital in the meantime until you know how to make money, because you won't make money. It's just not going to happen. You will either have beginner's luck or you're going to lose if you jump in head first. So the best thing you can do is get involved, but don't put too much skin in the game. Start with some blue chip stocks. Look at their charts, okay? What have they done? Did they go up? Did they go down? When they go down, where do they bounce? Follow a stock. Be patient. Wait for it to get to a level that you've seen it get to and bounce back up. And buy that stock. Invest in that stock. Couple shares. You're not going to make a lot of money, but if you do it right, you'll start to understand how things work and how they flow. Because when you're not emotionally invested, right? When it's paper trading, you're not emotionally invested. When you're emotionally invested, it makes you pay closer attention and really look at what's going on, and you'll learn much faster that way. But you don't have to be emotionally invested $20,000. $100,000 like I do on a daily basis. You can be emotionally invested with a couple $100, and you're still going to pay a lot of attention because it's your money, and everybody likes money. Well, I would imagine everybody likes money, and everybody's pretty emotionally connected and tied to a dollar. So if you can just get yourself in the market so that you're a little bit emotionally invested, that's the best way to start, in my opinion. One of the ways, right? Because you're not going to lose a lot of money that way, and you're not going to win a lot of money, but you're going to be able to join the game, right? And that's what it's about. It's about being able to be invested in this game for the entirety of your life. This is not a let's get rich quick and retire. No, this is learn a career. You can work from home. You can work a 9 to 5, come back home and still check your investments, right? This doesn't have to be a do or die type of thing. This can be a fun learning experience that you use over the course of your lifetime. And that's what I really want people to see trading, swing trading, day trading, options trading, futures trading, forex trading, investing, whatever type of style trading, investing you're doing, this should be looked at as a lifelong career that you can use over the course of your life. Okay? That's the way I want people to see this. I don't want people to see this as I'm going to get a lot of money super fast and then I can go buy a really nice car or a really nice house. No, I want you to see this as I'm going to learn a great skill. This is something that can provide me with an additional wealth that I can therefore reinvest into myself, into my 401k, into a different retirement plan, or this is something where I could maybe take 2 days out of the week, right? I have 2 days off. I work a 9 to 5. Maybe I can take 2 days off a week. I can learn this over the course of the next 5 years. And then for the rest of my life, I might be able to take enough time out of 2 weeks, 2 days off, sit down, trade the markets for a couple hours in a week, and I might be able to make $200, $300 extra a week. Now you have your groceries taken care of. You might have your phone bill taken care of. You might have your heating bill taken care of, right? It doesn't have to be about making shit tons of money. It could just be about making a little bit of money to help offset some of your cost of living, right? Just imagine what that'll do for you, okay? So you always have to ask yourself, what are you in it for? And make that clear yourself. What are you doing this for and why? And that will help set you on a more clear path. We already discussed Netflix, Ty, but personally, I'm short bias on Netflix right now. I have no idea. I have no idea what a video. I have no idea about Obama twerk video. Where do I see the markets heading? Honestly, guys, I would love to be able to tell you where I think the market's going to head. I would love to be able to tell you, how I truly feel about it. But still, it's the market, and it's so hard to wrap your head around everything. But again, as me, I'm going to stick to my gun, and my gun is I'm still extremely short bias on the market. Not like I'm shorting it, but in the overall view, the big picture, I'm short the market. Just makes sense. It's pretty obvious to me. We're extremely high in the debt cycle. Our market, again, is pretty overvalued. Some will argue that, and that's okay. You have to respect everybody's opinion, but it's a fact. There is no arguing this one, that the market goes through its cycles, and the boom and bust phase is built off of debt, debit, and credit. And right now we're extremely high in the debt cycle. So it's basically inevitable that we're going to come down. And anybody who says that we're not going to have a recession, it's not possible. We will have a recession because that is the natural flow of our market in regards to how it's operated. We don't have a system right now. Our market, the way it all works, it is not built to have a fundamentally sound market that stays consistent. The way our market right now runs and operates, it runs and operates on a boom and bust cycle. And we will continue the boom and bust cycle until really the market stops being manipulated and the banks stop loaning out tons of money. And until banks stop loaning out tons of money, right, and our system isn't built on debt, then we will stop having the boom and bust cycle. So you ask yourself, we will never have a recession, or we will have a lot less aggressive recessions when we stop loaning out tons of money and we have no debt and our system's not built on debt. Then we'll stop having these boom and bust cycles. But until then, we'll continue to have them, which means we're going to continue to have a bust, which means we'll continue to have things like recessions, which means a recession's around the corner. It's inevitable. It's going to happen. So in the big picture, I'm more short bias, on the market. And until then, I'll just trade it the way I trade it. But that's just it, right? I think what we're seeing right now, actually, I think we're seeing panic buying, the inverse of panic selling. I think we're seeing panic buying in the market. I think people saw that last drop in the market and they gobbled it all up. And then the people who missed the very bottom started buying it all up again, buying it. And I think we're going through a panic buying phase where people think the market's going to go higher. So we're driving it up higher when in reality it shouldn't go higher. So personally right now, I think the only people really truly buying up the market is high frequency trading machines and retail investors. And then I think all smart money's, I know that they've been moving out of the market for a while now. That's just what they do. They're smart. The market's high. So I don't care if it comes down tomorrow, goes up today. That's my outlook there. ASTC has low volume. Don't trade that. Andre, 1 minute charts are harder to identify things because there's so much going on. So a 5-minute chart might help you read things better, absolutely, but it doesn't make a 5-minute chart better than a 1-minute chart. So, which then leads back to preference. Thoughts on Riot? I think Riot's a garbage company. I would not invest in Riot, but you could probably make money trading Riot. right? Like right now, everybody's like, everyone's like long the market, and they're like, oh, like I don't know, dude. And from what I gathered, I thought the Fed meeting was not good, but then the market goes up. So, and that's another thing, guys, is sometime, and again, I know the market doesn't have to make sense all the time, but it should kind of make sense. And lately, I haven't been able to wrap my head around. Excuse me, I haven't been able to wrap my head around much that's been going on in the market. So for me, it's kind of like, what? Mr. Brooks, IPR bounce. Is the stock PR or IPR? Let's see, PR. Ansum Mohan. I don't trade DGAS personally. That's a 3 times leveraged ETF, so you don't want to hold that thing overnight. You really just want to day trade it, and mark my words, that is correct. It is extremely risky to hold anything that's a 3 times leveraged ETF. Yeah, you don't want to hold 3 times leveraged ETFs. You just want to day trade them. And I don't trade DGAS or UGAS. Those are built off the natural gas futures. So my best advice for you is, if you're going to trade DGAS or UGAS, don't ask. This is not to be mean, but if you're ever trading DGAS and UGAS and you want an opinion on it, you don't want to ask, what do you think about DGAS? You want to say, what do you think about the natural gas futures? Which means if you're going to trade DGAS or UGAS, you need to pay close attention to natural gas futures, not even the ETF DGAS. ICPT, there we go. ICPT. All right, ICPT, that was the one with the not earnings, but that was the one with that news, right? The news, it like shot up like crazy, and then it sold off like crazy. Yeah. Wow, look at that short move. Beautiful. Now I feel like a dummy for not trading it. So typically I would say that I would watch this for a bounce because it's at the 200 moving average, but this candle right here closed below the 200 moving average, so I would watch this. I would be a little bit more patient to dip buying. I think it could have a great dip buy soon, Mr. Brooks, but I think with the way this candle closed, you see it closed below the 200 moving average right here. That's a sign of weakness still. So I would maybe just maybe give it another day, maybe give it another day or two, and if it starts to kind of give you some bullish looks, maybe start sizing in slowly. Okay. I do trade options every once in a while, but not a whole lot. Yeah, Blade, you're right. So it's pretty obvious to me what the market's going to do in a whole, but when you're trying to predict macro moves, you really have, yeah. And that's the other thing, right? Is as a trader, you're forced to predict macro moves all the time, and predicting macro moves is extremely hard to do. So yes, I will tell you right now, without 100%, I am very confident that our market's going to come down. Do I know if it's going to go up today? Maybe. Does it really matter? No. It doesn't. Nothing in the short term actually matters. The only thing that matters is the long term. The only thing that matters in short term is if you're a trader. So, yeah, I mean, however you want to put that. But when it comes to macro trend, it's very hard to predict every move. Thoughts on Roku? I'm probably going to short Roku today. Nope, I did not trade DGAS. That was probably Ricky Gutierrez. I do have a margin account on Thinkorswim. When will I leave my regular job for a trading career? This is what I do for a career. I don't have a regular job. I did not go over Amazon. Let's see. I got to get back here. I prefer a margin account. In the long run, we're all dead. That's good. Yeah. Yep, I'm predicting an earnings miss. Now, that doesn't mean you guys should short it. All right, I'm going to short Roku, I think, today. I haven't fully decided, but I think I'm going to be short bias on Roku through earnings. I haven't fully decided yet, but I think I'm going to. I think I'm getting a vibe that we're going to. And even if I'm wrong and it shoots up, I'm still going to be shorting Roku soon, I think. Roku has increased over 100% over the past 2 months. That's a phenomenal increase. And if it does pop on earnings, I guarantee it gets sold into. But yeah, I think we're going to be going down personally, but that's just me. All right, guys, other than that, that's all I got for today. So thanks again for tuning in. If you guys could give it a thumbs up before you head out the door, I appreciate it. And then I'll see you guys all tomorrow morning for another watch list. All right, guys, take care.